To get water.
High school.
Yeah. Really?
Really?
Are we ready?
Acted.
Just about.
Got the
Are we waiting? We're not gonna wait for Anthony?
Yeah, so yeah.
Oh.
So the 3 part of this month. He actually
And-
said
Can we do it?
Bill-
last year.
Bill Conn will be on the phone and Mr. Jones will be on.
Yeah, no.
I'm gonna cancel that for you. We'll get to that subject tonight.
So you can call to order everybody. Ready when you are.
Oh, Lord.
All right. I'm not gonna bang on the gavel, but we're gonna call the meeting to order of the Water Board Audit Committee at 8:32. Okay, it's 8:32. Put that down. First item of business is a roll call, so we'll go around and introduce ourselves. I am Mike Franchini. I'm the chair of the committee. So that-
Bill Simcoe, I'm acting commissioner.
Rachel Johnson, committee member.
Chuck Holton, Chairman, Committee Minimum.
Karen Wilkes, project coordinator.
Aiful Islam, Chief Fiscal Officer.
Nora Murphy, council.
Steve Mercer, Communications.
Thank you.
And then. So, can you hear us?
Yes,
Yep, again, how are you?
Yep.
Bill Conn, great consult.
Yeah, I think that the speaker is right next to the chairman, so if-
No.
just for your microphone.
Go.
We can
Okay.
now.
Sorry about that.
Alright.
And
Do you want to introduce yourself?
Yes, my name is Jeff Jones of EFPR. I'm a director here at our firm, and we did the 2025 audit for the water board.
Thanks, Jeff. All right, so first, next item on the agenda is approval of meeting minutes. Do we need to read the minutes? No. So moved. Second?
Second.
Thank you. She was reading the minutes. Okay, all in favor? Aye.
Mr. Jones, we're a little short-handed today. That's what the humor was about.
Oh,
Just, sorry, Mike.
That's not a problem. I don't care. We're there. Okay, so the main item on the agenda is the presentation of the audit report, and I'm gonna hand this over to Ari. We're probably gonna hand it over to Jeff, but go right ahead. You
We'll
want
run it. Yeah, so we have just like kind of draft completed the 2025 audit, and our engagement partner was Tom Smith and Ethan. And Jeff is basically presenting the audit findings and the reports to us. And Neha Mitchell from my team, who was at camp, really helped me out throughout the audit, so I should give thanks to him. So I'll just pass it to you, Jeff, if you can. Sure. Okay, that was great. Well, thank you very much. And as mentioned before, my name is Jeff Jones of EFPR. I'm a director here with the firm. Tom Smith is not available today, but I work exclusively kind of with Tom in our government department. So I'm here just to kind of take over and fill in for him, and we'll kind of go through the overview presentation. So the year ends audited was for December 31st, 2025. And if you want to go to the next page, we like to introduce our engagement team. So Tom Smith being the partner, Ethan Yoder was the senior who was on site with Tom. And then one thing that our firm does is we have what's called a technical review partner. And this year that was Rob Williams. Essentially what it means is once the audit is completed, the financial statements are completed on our end, we have another partner kind of take a look through it who has nothing to do with the audit process. Because sometimes as you're working through something yourself, you know exactly where a number comes from or exactly how something works, but a third party then taking a look at it has no idea what you're talking about. So that's kind of the step that we take with this technical review partner who just comes in with a fresh set of eyes just to make sure that everything flows from their perspective as well as in a quality control perspective. Okay, if you can go to the next slide, please. For timing of our procedures this year, Tom and Ethan were on site for the week of June 22nd. With that, then we were able to turn around drafts on August 14th, and we hope to be able to issue final reports after today's meeting. Okay. The audit results. Now we expect to issue unmodified opinions on both the basic financial statements and the investment report.
an unmodified opinion is considered a clean opinion and is the best opinion that you can receive. It means that there was no material modifications to any of our actual audit procedures, no modifications outside of accounting standards or any types of laws or regulations that would require any type of modification. Any and all records, information that we had requested as part of the audit were freely available to our inspection. And that's something we always like to highlight because we don't always get to say that. So that's kind of a kudos to the team there that we were able to get everything that we needed in a timely manner. And then we do note that the results of our test didn't disclose one material weakness of internal control that we want to bring up to you, as well as 2 instances of non-compliance that we just have to report under government auditing standards. All right, next slide, please. So first, for the material weakness internal control, we had some significant audit adjustments this year. Management is responsible for maintaining all the accounting records and make sure there's always accurate and supporting documentation. With that, during the audit process, we had 7 adjustments. They were all discussed with management and accepted. And to kind of correct this going forward, we always just recommend that any significant asset and liability accounts just ensure kind of reconciliation is performed at year end, make sure there's supporting documentation in order to agree to those numbers, and that can help clear up these items going forward. Next slide, please.
Go back. What were the adjustments?
So there were a few adjustments. I'm going to pull them up on my screen just so I can go through them. So again, we did already kind of discuss these. There was some adjustments to accrued interest and to payables, adjustments getting AR up. Looked like we had, the very end of AR was missed. Adjustments to your leases, as well as then items from the city's books in order to kind of square up and true up any of the tax years that needed. So those were the main areas that we had to focus on. So really receivables and liabilities are 2 areas of focus that we would say when it comes to kind of year-end reconciliations to make sure that we get all the numbers right to avoid this comment in future years.
Okay. Yeah. Bill, can you hear? Bill Kahn?
Yeah.
Okay,
I can, yes.
go ahead.
Okay. So next slide, please. Your annual reporting to the New York State Authority Budget Office. This is your Paris filing. They do have a due date. It's usually within 90 days after year end. Obviously, we are well past that. So this is just a kind of a triggered comment that we have to put in here. Obviously, that is very hard to do with kind of the city having their year-end reconciliations and you having to wait on them. But yeah, I know this is something that's kind of important that's been brought up in the past and something that you are already kind of working on or working towards getting kind of cleaned up. But again, because the 90-day deadline was missed, it's something we do have to disclose and note in the report. Okay. Next slide, please. Uncollateralized deposits. So New York State General Municipal Law says that all deposits in financial institutions must be covered, whether it be with FDIC limits, which is the Federal Deposit Insurance Corporation limits, or additional collateral that's provided by a financial institution. For you, for example, that was M&T Bank. At year end, we noticed that there was just over 143,000 that was not covered under those insurance limits. That's something that we always kind of have to highlight on. It is a law that we have to kind of, if you miss it, we do have to disclose it. It's something usually you can just talk to the bank about and they can ensure that additional collateral is provided for you. So
Bill,
that should
you
be
had a comment about that.
Yeah, I was going to save my comments to the end, but I certainly, I have a question with respect to this and how that was computed, because we believe it's an account by account issue, and you're not incorporating the funds that are with the trustee, I don't think.
So when we take a look at solely M&T, just as an as your example here, what the general municipal law says that you essentially have first of FDIC insurance, which covers up to $250,000 of both basically savings accounts and checking accounts individually. So in total, you have about $500,000 of FDIC insurance. From there, if you take your total deposit, let's say you have, $5 million in cash deposits with that single financial institution, meaning with M&T, then you have to cover the rest with collateral. Now, the bank, the financial institution, usually just sends you a letter. They tell you how much collateral you have at year end. They did that this year, but it was short from the total you have on deposit with them by 143,000 and change. That's what triggered us to have to just report this to you. So they did send you a statement and whatnot, but again, it was just short at 143,000.
Was the test date as of December 31st?
Yes.
Only on that date? You didn't look at any other dates?
The date that we have to highlight, because the date that we are for our opinion date is for as of the year end. So that's the date that we have to stress and actually report on. So that's the one that we are focused on as far as your comment here goes. Because throughout the year, of course, they change based on how much you have on deposit with them. And a lot of times issues like this can occur when end of year deposits happen. Let's say a deposit happens right at the end of December and it's not caught by the financial institution in a timely manner. Maybe they don't allocate more to your collateral until January 2nd or 3rd. And that's what causes it. Is a lot of times it's just a kind of a timing delay. But because it was under collateralized at year end, that's what caused us to then have to report it. So again, you might have been then fully collateralized 2 days later, but because we are reporting on the water board as of December 31st, that's the date that we have to say whether or not you actually have the collateral in place. Just another question on that. We'll go to the next slide. So the administrative fee. Now, this is something we've actually been talking about over the last few days, and we are going to be amending this comment. This is something that was carried forward from last year about how the city essentially had direct access in order to, whether it be the wire the funds or make journal entries for how much the board has to move over without the board's really knowledge or receiving sufficient backup to substantiate the amount. So we are amending this comment slightly, and a revised draft will be going out today for it. But the biggest thing that we still like to stress, and it was again there from last year, is that if the city is saying, you should be wiring this amount or this amount is owed over, the board should be getting backup as to why they owe a certain amount. And that's the biggest thing we want to stress, is it's such a large dollar amount each year that you should have support for as to why you owe certain money and to kind of what makes up that balance. So this is something we just considered a comment, not a finding, because management layer comments are essentially comments we will only give to you to improve your best practices, because there's nothing where no law was broken, there was nothing out of compliance, simply best practice we want to communicate to you and something you can do to improve your controls going forward.
We're very grateful you put that in there because that helps us through the city. It's a real problem. We're very concerned about it. Thank you.
Of course.
And then the wire thing was taken out, right?
Yes, so that is amended. Again, we're going to do a revised draft this morning over to you, but the comment about the wire being in there has been removed. Okay. So if you want to go to the next one. So now I'm going to roll into the actual financial results. So we took a look, and your current assets end up decreasing about 1.2 million now to 23.8 million. Mainly just due in the amounts of due from other municipalities. So timing of receivables and payables always kind of take a large impact on this page when looking at that. We also took a look at your non-current assets, which had a very large increase this year, 14.5 million, now to a balance of 174.6 million, mainly because you did a lot of projects this year. So you had a lot of capital asset additions, and then the 14 million is a result of those additions, less than depreciation on capital assets, as well as in disposals that did occur. Your total liabilities end up decreasing about $5 million now to 109 million. We saw the largest swing in that was your decreases in your bonds and capital notes, 2.5 million, which it was very standard because as debt goes on, it's going to be paid off and going to go down. And then also a swing in the due to other municipalities of 1.3. So kind of again, those assets and liabilities are always coming and going depending on timing for year end, when invoices are received, when payments are actually made. So all completely normal in line with expectations. The next tab, please. So now we look at your net position. So net position is your equity, and it's broken up into 3 different buckets. The first being net investment in capital assets, which is all of your capital assets, your buildings, your infrastructure, your ongoing projects, less any related debt that's used to finance those. So, for example, if you have your EFCs, bonds, anything like that that's being used to finance those capital assets. Next is anything that you've designated that's been designated as restricted. And then the final bucket is kind of everything else, which is the unrestricted net position. So in total, we saw the net position increase just over 18 million, now to just over 89 million. Your net investment in capital assets bucket ended up increasing just over 13 million, now to 61.3 million. And kind of, as I mentioned, it was mainly due to those capital asset additions, less any kind of appreciation or disposals were the main driver for that. Your restricted net position increased 1.4 million, now to $14.2 million. That's due to increase in your restricted investments. And then the final bucket is essentially everything that wasn't in the first 2 buckets, unrestricted being an increase of 3.5 million, now to $13.6 million. Next page, please. So we saw operating revenue actually increased about 6.7 million up to 44.9 million, mainly just due to increases in both the charges revenue for both your rate and consumption, both those increases. Your operating expenses increased about 3.8 million, now to 42.8 million. That's mainly due to some maintenance and operating of the water system, as well as we also saw the startup for the Beaver Creek Satellite Treatment Facility, so additional costs were incurred there. Your non-operating revenue and expenses, as well as your other additions and deductions, overall, there was an increase. It was 10.2 up to 16.1 million. That's mainly just due to changes in your capital grants of 12.7 million, offset by some decrease in capital contributions. A lot of those capital grants ended up actually being the financing for the additions that we noted on page 4. A lot of projects were financed then by New York State grants and other sources. Next page, please. So finally, we just have the report to the board. This is just kind of our general communications we want to present over. Any significant accounting practices were described in note 1 of the financial statements. We took a look at the estimates and we noted that everything was reasonable and supported. The financial statement disclosures, they all appeared neutral, consistent, and clear. And there are no difficulties in performing the audit. We had no disagreements with management about whether it be an accounting or reporting or an auditing matter. Next page, please. We will obtain a management representation letter. Essentially, after we send out the revised drafts later today, we'll ensure that we are in agreement and we're ready to be finalized. And then we send over this letter. Essentially, what it is, it's the water board accepting the financial statements and wrapping up and finalizing everything. We said that there was no significant changes, whether it be to our planned audit strategy, significant risks initially identified, and anything previously communicated with those charged with governance. No matters noted that were relevant, whether it be the audit with regards to violations or possible violations of laws, regulations, no risk of material misstatement, including fraud risks. Essentially, there is nothing that we felt needs to be brought to your attention other than what we already discussed today. Next page, please. We're not aware of any consultations, whether it be in regards to auditing or accounting matters between management and other independent accountants. There's no disagreements with management about matters whether or not satisfactory and resolved that individually or in the aggregate could be significant to the financial statements or to our auditor's report. and no other matters that we feel need to be discussed today. Nothing else that needs to be reported other than what we've already talked about. Next, please. And the final thing I'd like to talk about is just as a FYI to you is the upcoming GASBs. So there's 3 that are out right now. First one is GASB 103. That will be in effect next year. Essentially, what it's going to do is change around your reporting a little bit. For example, your MD&A is going to change in how it looks a little bit. Any RSI items get changed around, they look a little bit. There's no actual number changes. The GASB is essentially coming out and giving a more uniform approach to the MD&A, for example, so that each government is more comparable. Each government has the same layout. So instead of it being, kind of more tailored toward the individual, it's going to be more just standardized format. So again, no real number changes, just some formatting changes, how stuff's going to look. But that's something that we'll be working with you next year when we do the audit, just to help you understand it, as well as kind of show you the whole layout. And they're already in advance now. So by the time your audit comes around, we'll have done probably 100 times. So, we'll definitely be very fluent in it. We'll be happy to help you to understand anything. The next is the disclosure of certain capital assets, GASB 104. That essentially is just going to be additional disclosures in your financial statements. It's going to beef up your capital asset footnote a little bit and just talk about it in a little more detail. Again, something we'd be happy to go into more detail with you next year as we're going through the audit and then the financial statement process. And then the final one is GASB 105, subsequent events. That's not going to be for next year. That'll actually be for the year after. And with that, we'll just kind of be we'll go through it again with you just to make sure that we're all in agreement on how everything works. We always like to note that it may be unknown how it could affect your financial statements, just only because we haven't done it yet. I mean, again, we have a lot of experience already doing these GASBs, but because we haven't done yours explicitly, we always like to kind of say maybe there's an unknown effect, or we haven't exactly seen how it's going to look for you in particular. But again, we have already done this one many times, so we're not concerned that there'll be any hiccups or delays in regards to the implementation of the new GASB statements. And again, we'll work with you next year to kind of go through all these as they come about. Next slide, please. So that was all I had. I guess if there's any other questions I can help answer while we're here.
Bill. Go right ahead.
Whenever there's time.
Yeah, Bill, go right ahead.
So one of the things I wanted to just briefly talk about is on page 33 of the audit report. There's an indication that our rate covenants, rate covenant is positive, and it explained it, but it doesn't tell us what our rate covenant ratio is. So when you have a moment, can you send that to us, and also the actual computation?
Sure, we can take a look into that, and we can get something emailed over to you.
Right there. Rate covenants. We're just trying to find it on the screen here, Bill.
Yep. Yeah, right there. So yeah, 9D is what he's referencing for the rate covenants. Yeah, our team can send you that over.
And the other item I just wanted to touch on, and I'm a CPA. I've been involved in many audits over my career, but am I correct in that you never visited your client this year? In other words, everything was done remotely?
No, I believe that the team did come on site during actual field work, if I remember correctly. I believe that Tom and Ethan had come out. Basically, especially since COVID, it's been a lot different with a lot of our clients. We have many audits that we do in person, many that we do virtually, many that we do more of a hybrid format where maybe we only come out for a day or two. But that's something that we're always willing to come on site. That's no problem at all.
Or just to correct, like this year, there was no in-person visit. By audit.
Gotcha.
So,
Yep.
I mean, it's just remarkable that you into some real depth on some of these issues, but there was never discussion with the client, you know, on a face-to-face basis. And it just seems that I think it's awfully tough to do an audit without looking at documentation.
Well, we do look at documentation. One thing that we have is called ShareFile, which essentially is an online secure portal. So, for example, if I wanted to, as part of an audit, we look at, let's say, 50 cash disbursements that occurred during the year. What we end up doing is actually kind of selecting those, speaking with management in regards to them, and what they'll do is then scan and send us the backup and support for those items. And that then allows them to kind of pull them and have them available at their leisure and give them to us, and we can perform all the same test work that we would have if it would have been in person and on site. So no audit steps are kind of shortcutted, no audit steps are missed. Everything is done the exact same way as if we would have been on site. Kind of the only difference is we're not, I guess they're sitting at the conference table. Instead, we're sitting at our desk and everything is going through that secure online portal. But we still will look at everything that we would look at in a normal audit. We still look at the same number of invoices, bank statements, cash receipt documentation, anything along those lines. So it's not that there was any type of audit procedures that wouldn't have been performed because it was a virtual versus an in-person on-site audit.
Okay, thank you.
Yep.
Okay, do any of the committee members have any comments? Any comments from staff?
Good.
Hearing none, we'll go to the next item on the agenda, the vote to recommend. Do we have?
We can let Mr. Jones go, probably.
Okay. Jeff, we're finished with business with you, if you'd like to sign off.
Okay, great. Thank you very much for your time today. And as I mentioned, we'll have the revised draft sent over to you, and we'll also then take a look at the rate covenants and have those emailed over to you. Thank you very much, everyone.
Thank you.
Bye-bye. Thank you, Jeff.
Now we can move to a vote to recommend.
I'm in agreement with Bill. I just may.
It is amazing. I mean, I wonder, does it require more effort on our, by our staff to download all those documents and get those documents to him? So is he not just transferring costs, from his business to our staff?
So, I just want to add one thing is like, that is the reason like, myself and Neha was like so busy on audit, because every day there was like maybe in total like 9 audit requests, and each audit request has like 35 or 25 lists in it, and like invoices like 70 or 80 invoices. So you have to go and find these invoices, upload them, and like the whole day gone is just finding and uploading and all those documents. But yeah, I mean, they have all those documents. That's how they were able to finish this audit, but lots of time that get like used in that process.
They didn't charge us for any travel.
From his office to the computer.
I hope you're still on the call, Bill.
They have a flat fee that they charged, so.
If they were present in the room with the staff, your staff still have to go find these documents and bring them into a conference room?
That's true, but we can also like maybe just give them access to our computer. Maybe if they come, like maybe one of our computer, we can just give them access and then
I see.
all the documents in there, because uploading to a portal takes time. Like some documents are really like big document, it takes time. So putting in one folder, then from folder, then uploading the documents to the portal. Sometimes the portal doesn't work. So there is a situation like 1 or 2 days, the portal was not working. So we have to email them, and certain files are so big that we can't even email them. So we have to wait 2 days until the portal fixed. So It's challenging, but it's not really bad, but it's okay, it's manageable. Yeah.
Not optimal.
Yeah,
I do want to say one thing though. It's a real credit to you. It's a pretty clean audit.
oh, yes, a
Yeah.
lot of positive comments.
Yeah.
But I mean, the amount of work that you and your staff have to do to get something like
It
this
is
done
gigantic.
remotely, no less. Has to be a big drain on your resources, has to be, there's no way around it.
Well,
And they have
luckily we had our temp,
Right.
got right away.
I agree. It's just two things like it's not only the knowledge, it's also like the timing to finish the admin work. It takes so much time to the invoice is there in one of the folders, so someone has to go to the folder, pick that invoice, put it in the right folder, and upload it.
Copy of it.
That admin work takes time, and I was in a situation after Chris' departure, like I was trying to settle down, so I had the knowledge. If I was putting my whole effort to the audit, I could have finished it by June. But the reason I couldn't finish it because I was busy with something else, so I had to transfer my knowledge to Neha, and Neha has to utilize that knowledge, and she has any question, come back to me and putting those together. But she was she was great, and she helped me a lot with this. So I'm grateful. I think it's much easier than 2023 audit when I came as a temp. That was the hardest. So nothing was matching, no cash reconciliations, none of the account was reconciled. There was like journal entries booked that is not correct. So suspense account had $8 million. No clue where the money goes and coming from. And so it was hard. The 1 month hard work gave me knowledge of like in and out of the whole organization. So I think this is my third year facing the audit. So I know what needs to be done. The journal entry, the first journal entry was like around 24 to 25, maybe 30. That was provided by auditors. But then it calmed down to like in last year 15 to 17. This year 7. So next year I hope not. So
All right, we're gonna keep moving here. So let's go to the next item on the agenda. Bill, I just want to make sure, since you're not here, do you have any comments? Any other comments? All right, just make sure. You'll do something?
No, I will move the motion to accept the audit.
Okay, you have a motion to accept the second, all in favor? Aye. All right, thank you. Is there any new business for the committee?
Like,
Oh.
the authority should be scheduling a meeting to do the same thing.
Yes.
Yeah, it's coming up in September.
next month, 24.
Okay, and I think as much as we all want this to be closed down, it shouldn't be before they approve it.
Okay. All right,
But it's not final to both boards.
so both boards approve it. Okay. Okay, is there any need for executive session? Seeing none, call for an adjournment. Do I have a motion? Second, all in favor? Aye, thank you. Meeting is adjourned. Next meeting of the audit committee will be determined at a later date. And we'll meeting.
Yeah.
I'm not going to bang the gavel.
Did we have another year with